Today, we're talking about ETFs, explaining what they are, why they're useful, and how you can use them to better your finances overall. Hey everybody, and welcome back to Dollars and Cents, helping you make sense of making dollars. If you enjoy this video, like and subscribe. Without further ado, let's get right into it. First, what is an ETF? For those of you who might not have seen my last video where I briefly touched on what it is, an ETF stands for Exchange Traded Fund. They allow you to own shares of a bunch of different companies and assets depending on what your goals are and what you want to invest in. The best way to start understanding them is by looking at a few. By far, the largest ETF by assets under management is ticker symbol SPY, or the Spider S&P 500 Trust ETF. By owning this ETF, you, in effect, own a minimal piece of every company in the S&P 500. The S&P 500 is a collection of the top 500 companies by market capitalization managed by the S&P Dow Jones Indices, a joint venture majority owned by S&P Global. Let's say you went out and bought one share of this ETF at the current share price of $382.88. The way the SPY ETF is organized, you get a small piece of every company in the S&P 500, and the amount of each share is different. This is referred to as portfolio weight percentage and is the amount of the stock that the portfolio is made out of. In this case, portfolio weight is determined by the market cap of a company. Market cap is the total amount of shares owned by investors multiplied by the share price. We'll use Apple as an example. The total amount of shares owned by investors is right around 16.82 billion for Apple. We multiply this by the price per share and we get its market cap, roughly $2.4 trillion. Since Apple's market cap is the largest of the S&P 500 index, it is the highest portfolio weighting in the ETF, at about 6.7%. Looking back at the share price again, that means when you buy one share of SPY for $382.88, 6.7% of that will go towards a share of Apple stock. This works out to $25.65 of Apple stock, or 18.44% of one share. Since the portfolio weighting percent is determined by market cap, that means the next largest company, Microsoft, will have a smaller weighting, and so on down the S&P 500 index. One more ETF I would like to mention is one that I have mentioned in the past, WCLD, the Cloud Computing ETF. I personally believe that cloud computing is going to be a booming industry in the future. With this ETF, you're getting exposure to some of the major players in the cloud computing space, such as Cloudflare, Twilio, and my favorite company, CrowdStrike. Moving on, one of the best resources that I use to find these ETFs is ETFcom, link in the description below. Landing on the first page of their website, we are greeted with a few articles about ETFs, but we're not here for that. No, let's go look for some ETFs. Taking a look here, we see the estimated earnings growth numbers in 2021 from FactSet, also linked in the description below. We see that the industrial sector is expected to post the best earnings in 2021, and we think, I want to get on that. Well, we can. Just go to etf.com and type in industrials. The first fund we find is XLI, the Spider Industrials Fund. If we scroll down here to the bottom, we can see that this ETF holds some of the best stocks in the industrial sector, including 3M, Lockheed Martin, and its largest holding, Honeywell. Using ETFs to invest is the best way to get diversified quickly, too. Instead of looking through pages of quarterly reports and doing in-depth analysis in stocks to find the best ones to buy, we can just use ETFs. Now I hear some of you saying, wow, this sounds incredibly simple. There's no way investing can be this easy. To that, I say it absolutely can be that easy. You don't need to go out and pick the best stocks individually. If you have the time to go through quarterly reports and keep up with the news and you like doing the in-depth research that it takes to outperform the overall market, then go ahead. However, the time and dedication it takes is a lot. Plus, I wager many wouldn't even want to do it at all because most people actually like to enjoy their free time. Before we wrap up this video, I want to go over a few more things to look for when examining ETFs. For this, I'll be using Morningstar's website as it has a lot of really useful information, including the stats we are looking for when examining ETFs. Let's go back to XLI, the industrials ETF I mentioned earlier. It has an expense ratio of 0.13. For every $100 you invest in this ETF, you will be charged 13 cents every year, a small price to pay for sure. The 13 cents pays for the fund manager's services. We can find this information on the quote tab of Morningstar's page on XLI. Next, I like to look to see if there's a dividend yield for XLI. Looking here, we can see that there is a 1.55% dividend yield. That means for every $100 you invest, you will get paid $1.55 yearly just for holding the fund. You can reinvest that $1.55 to get more shares. We also find this on the quote tab here. A few more things I like to look for are the 10-year return to see what the XLI ETF has made in the past. We can find this in the Performance tab. And scrolling down here, we can see that the 10-year annual return is 11.72%. I would consider this fairly good, considering that the average return of the S&P 500 index fund SPY's average return is 7.1% every year. Finally, the last two things I'm going to look at are the Risk tab and the Portfolio tab. The Risk tab allows us to see the risk of an ETF versus every other ETF in its related category. For XLI, we can see the other ETFs that focus on the industrial sector. Also, we can view the return versus category. Both the risk versus category and the return versus category are beneficial to see for sure. As we can see here, XLI has a lower than average risk, while its return is roughly the same as its competitors. The Portfolio tab then allows us to see the sustainability rating of the fund. If you like ESG investing, which I won't talk about in this video, the sustainability rating is a very important factor. You can also use this tab to look at the different holdings. I hope I was able to give you some insight into ETFs, what they are, and how you can use them to invest better. To me, this is the easiest form of investing. It allows you to invest without the worry of whether what you're investing in is actually a good investment or not. I recommend this style of investing to everyone who is just starting out investing because of how easy it is to do. Even my portfolio, which consists of almost entirely individual stocks, still has ETFs like WCLD and the gaming industry ETF, ESPO. ETFs can be one of the most important assets for any investor, seasoned or new to investing, and I really hope you'll consider them for your portfolios as well. That does it for this video. I hope you enjoyed it. If you have any questions, be sure to leave them in the comments down below, and I will try and answer them best as I can. And with that, I hope to see all of you in the next episode of Dollars and Cents.